Welcome back to the Dividend Diplomats YouTube channel. You know you're rocking with your boys. Bert rocking the CLE hat right there. And you've got Lanny. We're both rocking the DD Diplomat mugs. Check out the swag below. I got tea in mine. Bert, what are you sipping on right now?
Some old black coffee here. No milk, nothing. Just straight caffeine getting pumped into my system today.
That's what it's all about. I'm trying to deal with my congestion. Bert, I think you got the same going on over there. But guys, today we're talking about two dividend growth stocks that I have never talked about, never looked at. Bert, I'm sure you've never really looked at.
No.
This is all because of you, the commenter. So thank you for the mentions. We're trying to get to them as quick as possible.
Yeah, this is another reason why you should look down there and subscribe to the channel. Give the video a thumbs up because we always talk about stocks we're looking at too, but we always ask you, what stocks do you want us to take a look at? And lately, we've been trying as hard as we can to cover as many of those stocks. We can't get to them all, but every once in a while, we love your ideas. And it's helped us find dividend stocks to invest in over the years too. A lot of people said recently Medtronic. That's how it popped up onto our radar too. We were looking at stocks, but Medtronic came to us and we started buying it after all of you started telling us you were buying them and looking at them. So please keep the comments going. And that's why I'm so pumped up that when Lanny did the research, he put these two stocks that you're talking about because I want to see, are these stocks to buy? Lanny wants to see it. And more importantly, you guys want to see, do we think these are two dividend stocks to buy?
All right, guys, drum roll here. We all know the stock market has been getting crushed. Check out Sunday's video about the two dividend aristocrats Bert's buying. So here we go. We're going into the industrial space.
Ooh.
Truly industrial, because we're talking the first company here at Triton International, which is really a big player in the intermodal container company business. You know, those big things you see on piers that contains all your goods that are being shipped after they get into a certain area, you know, whether it's by train or truck. So that's one of the big companies we're talking about here. They're about $4 billion in market cap. And the second dividend growth stock going along with the same commenter. So thank you again. We're looking at Expeditors International of Washington. That ticker symbol is EXPD. The first dividend stock is ticker symbol is TRTN. And Expeditors is in really the customized supply chain solution arena. You know, really think of them almost as a Granger type of company almost, you know, dealing with the technology and systems that are in place at businesses.
Yeah, I had to laugh at first. I thought when I looked at the tickers before I looked at the names, I thought we were looking at Expedia for a second when I saw that with the EXPD. But you know what? Dividend stocks don't have to be the flashy consumer-based companies. Not all of them are going to be like Procter & Gamble where their brands are out in front. Not all of them are going to be those like Targets, your Walmarts where you see the brands. There are a lot of great dividend stocks that do work behind the scenes to help get those goods to these stores that play a major role in making it happen and being a part of our global supply chain. So these are some of the best ones too to look at. So I'm pumped up to talk about Triton, to talk about Expeditors. These are going to be some great stocks to look at. Do we want to talk Triton first, Lanny? Go through some other metrics with them?
Yeah, we're going to dive into Triton, guys. Again, ticker symbol is TRTN, trading at $67.75. Hey, they actually just increased their dividend too. I do want to mention that they went from 65 cents to 70 cents, so a nice 7.7% dividend growth rate right there this year. So we'll get to that when we go through the metrics. Also in the latest earnings release, you know, net earnings right now, Q over Q, aka Q3 22 over Q3 21. It's actually up over 18.5% right there. So solid on the earnings front. They're looking at around 1.6 to 1.8 billion in projected overall annual revenue. You know, the one thing though is, again, they're at the heart of the supply chain. They're the middle person that's going from the right to the left. And the CEO did say in their earnings release that they anticipate adjusted net income per share will decrease almost definitely as their utilization and used container sale prices decrease from the extraordinarily high levels during the pandemic. Because again, they could charge more because, hey, everybody needed all these supplies. And but now that things are kind of slowing down, prices have to come down to meet the softer demand.
Well, what I think is interesting looking through that is it was very prudent of management. If earnings increased 18%, they could have easily just done, hey, we're going to do an 18% dividend increase, but they didn't say that. They just kept their dividend increase in line with their average. They're going to stay the course. Their increase is 7.7%, kind of build in some of that slowdown that management's talking about there. They don't want to get ahead of themselves and cause future pain with dividend cuts or dividend slowdowns. Just keep it steady, keep it in there. But that's awesome. Let's look at their balance sheet too, because how levered are they? That's a good question to ask, especially for a lot of these companies where that might be subject to future revenue decreases and earnings decreases. Debt to equity, 251% is not the percent ratio you're looking at, but when you take a step back and actually look at the balance sheet, it's interesting to see. Balance sheet's not bad. The balance sheet is not bad, and the debt's going in the direction you want it to see. Debt's going down. So they're using some of that earnings, some of that extra cash flow to keep the debt levels manageable, and they're still increasing their dividend along the way at a reasonable clip. Doesn't matter though. Yeah, liabilities are decreasing. That's the level that you want to see. Lastly, while we're hanging out here on the balance sheet, Lanny, let's talk about equity. Everyone's favorite topic. We might need some more of that coffee while we're talking through equity here. It is worth noting that they have decreased their share count by 13% this year. So you're seeing some share buybacks here with Triton. So just a trend worth noting. And it's particularly interesting because their stock price increased. You usually see that when the stock price decreases, that's when they start increasing the buybacks.
Yeah, spot on. Period.
Yeah.
So let's dive into the Diplomat stock metrics. We're going to go through the 3 metrics, guys: price to earnings, payout ratio, dividend growth, and we'll throw in dividend yield here on Triton. We're going to kind of go a little quicker here so we can get into that second stock. But for Triton, trading at 67.75, up 12% this year, up 21% since last year. Talking about a stock that's in the green. Their projected EPS in 2023 is $10.36. So price to earnings ratio is 6.5.
Why that's important here, that is so cheap, but also management's already talking about how it might come down. Let's just half that. Let's just make it $5 per share, a little more than half. EPS is still cheap at 13.55.
Oh, it's true. It's dang true, brother.
So how about that payout ratio? After that modest 7.7% increase, their annual dividend is $2.80. Payout ratio, 27%. Very low. Same thing. Let's chop EPS down to 5 here. What's going to happen with the payout ratio? Just to see, let's have some fun with this here. 5 EPS, 56% payout ratio. So it still meets our metric. So again, earnings are going to come down. They're still looking good, even with the decreased earnings.
It's still a good. It's still a good.
It's a good.
Now, going in again to that dividend growth. Dividend Investor shows 5+ years of growth at an average rate of 8%. Last increase was 7.7%. So spot in line. Very solid dividend growth rate. Now, does the yield commensurate with the growth rate? Or what's that yield look like on Triton TRTN?
4.13%. So it does. It absolutely does. Here, to summarize, PE ratio 6.54, payout 27%, 5-year dividend growth rate 8.13%. They've increased that dividend for 5 years, and that yield is 4.13%. Let's talk about Expeditors International of Washington, Lanny. Lay some of the facts about this company on us.
Well, let's get into Expeditors, because first, Triton, great dividend stock metrics. Expeditors International net income is up 15% Q over Q, up to 414 million now in net profits. So really crushing 2022 as well, similar to Triton. Management also said, based on what they currently are seeing, they're also seeing decelerating in demand, which is similar to what Triton is going through as well. Because of the overall inventory levels that were happening at other businesses. So they are saying decline in rates for the remainder of this year and definitely in 2023. So the amount that they're going to charge, the amount of business that they will have will go down simply because of demand softening.
Yeah, same thing. It's interesting how both management are singing the same tune. So let's look. Revenues are what, 18 billion for 2022. So this is obviously a lot larger than Triton here. Their market cap 17 billion. So we're talking a much larger scale company. Looking at that balance sheet though, their current ratio is 2x. So current assets easily cover the current liabilities, which is key when you're talking about decelerating business and decelerating revenue.
Exactly, guys. And another thing to mention too, I don't think I see any long-term debt when looking at their balance sheet, just from the press release. If there is long-term debt that you see in the quarter, the 10Q or the 10K, let us know in the comments, but no mention, even control finding the word debt doesn't even pop up. So you kind of like that if that's the case. Liabilities to equity is also at only 0.89, whereas it was at over 2 with Triton. So very solid balance sheet.
Yeah.
With with Expeditors International here. Again, ticker symbol EXPD. So, Bert, we've covered those metrics. Time to get into the dividend diplomat stock screener metrics. Hit them hard on the DD screener.
Price 108.54, EPS 580, PE ratio 18.71%. So Triton, if you just half the EPS, this is obviously going to jump up to be a lot more expensive. It is clearly not as cheap as Triton was with the PE ratio 6.54. Payout ratio, their annual dividend, $2.68. Payout ratio is 46.21% today. So at the moment, right in that old sweet perfect dividend payout ratio spot. Lanny, how's their history looking?
Guys, they've actually have over 19 years of growing this dividend.
Ooh,
19
okay.
years.
Okay.
Unexpected, again, something that I don't really, see. It's again, a company that I've never covered before.
No.
But 19 years of increases. They're on their way to being a dividend aristocrat. And the last increase was actually massive, for lack of a better way. The last increase was about 15%.
Yeah.
Now they're on a semi-annual paying cycle. They pay every 6 months, so June and December. So you probably just got the dividend if you own the stock last week on the 15th, and your next dividend, you can wait. It's going to be paid out in June.
Yeah.
Next year.
Interesting. It's a good call out there. It's not expecting you're not going to get your quarterly dividend if you own them. Let's look at that yield though. 2.47%. So a very modest dividend yield here, well above the S&P 500, a little bit below your payout. Not your payout ratio, your high yield savings accounts. That's what I was talking about here. But you know what? Not bad. Not bad at all. So let's summarize. PE ratio 18.71, payout 46%, 5-year growth rate nearly 10%. Almost a dividend aristocrat with 19 years of increasing your dividend and a yield of 2.47%. Lanny, what are your thoughts on these two stocks I flagged by our commenters?
If you guys are looking to buy some industrials, here are two great dividend stocks, both. I own a lot of industrial companies already.
Yeah.
Illinois Toolworks, Granger, Rockwell. I can go down the list. My position's pretty large. Like Triton a lot.
Yeah.
Really low payout ratio. Again, even if you cut the EPS by half, you're still at a 54% payout ratio and at a 12 PE, but you're getting paid over 4% yield, which is over most high savings yield accounts. But you're getting better dividend growth from Expeditors International, EXPD. I think both are great companies.
Yep, I'm with you. Again, I'm not running to buy right now. I'm trying not to add too many new positions, even though I just threw in Medtronic, but both look great. Triton, if it keeps falling, I'll definitely be keeping an eye on that one. That's not a bad one. I'm excited. And Expeditors just pay. Again, keeping it on my watch list. This is why we are so pumped up when you guys tell us about stocks. I would never have considered these two companies without all of you. Now they're on my radar and maybe popping up on my watch list in the coming months. So everyone, thank you. We really mean that. Thank you very much.
Yeah. Let us know in the comments if you guys own Triton, TRTN, or Expeditors International. Again, ticker symbol is EXPD. Let us know if you're buying these dividend stocks right now. What other dividend stocks you're buying as the market is coming back down post Papa Powell's comments. Guys, hope you guys have a really good Christmas coming up here this weekend. It's going to be awesome because, guys, we're all trying to pursue financial freedom one dividend at a time.
Don't forget we're in the heart of Hanukkah right now, Lanny. Can't believe you would forget that. How dare you? No, I'm kidding. I almost forgot it myself. So I'm kidding. Never, if you haven't already, subscribe to that channel. Give us that thumbs up. Keep the stocks flowing. Keep growing that passive income.
And you're either with us or you're against us. That's Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.